Welcome to the Money Printers Podcast. I am your co-host Dame, here with my billionaire brother Tola. Billy boy, what's going on, my brother?
Woo! My billionaire brother, I'm feeling golden, golly, and amazing. Welcome to another episode, y'all. I'm feeling good though, bro. How you feeling?
Feeling good, my brother. Quarter one is coming to an end, man.
It is.
2022 is going real fast. So, how was your quarter so far? How's your quarter going?
The quarter's been pretty good, man. Pretty strong quarter. You know, the market is doing a lot of things right now. Absolutely. A lot of uncertainty with the market. Market's going down, market's going up, market's moving sideways, right? But we print money either way. So, but how about you? How's your quarter been?
Quarter's been amazing so far. As you said, the market has been up and down, but it's a lot of opportunities to print. We knocking out these goals, our strategic goals and everything. So the quarter's been good. So, can you talk about how did you plan your 2022, like strategic goal setting? Like, how did you go about doing that?
You got to reverse engineer. So, start with the big goals and figure out how I'm going to knock it down, right? So we had a lot of goals that we had set, and we, just mapped it out, put it on the calendar, and just started to go about it that way, and just start to attack them. That's the only way that you can really, start the year. You gotta write your goals down, and then after that, you just gotta go out and start doing it. So a lot of people, it's funny. My cousin just said you can't try, right? It's either you do it or you don't. So I know a lot of people like to say, "Oh, I'm trying." It's either you go out there and you do it, or you don't do it. So you write those goals down and crush them.
I like that you said that, because a lot of people have goals, right, and then they become dreams essentially because there's no plan of attack. Right? Mm-hmm. So when you have those smart and strategic goals, as you said, you reverse engineer it. So you start with a big goal, and then you start to work backwards. So if your goal is to make, let's say, $1 million in a year, you're like, okay, the end goal is to make $1 million. All right, how much money would I need to make per month? So you divide that up per month. Okay, how much money would I need to make per week? How much money would I need to make per day? How much money would I need to make per hour? Okay, now what can I do to make this amount of money per hour? You reverse engineer those goals. You make them small and attainable. So even though it's a large goal at the end, breaking it down to smaller pieces, it helps you not be as overwhelmed as you were just thinking about that overall goal. And then being strategic with your time, right? That time management, having a calendar, sticking to your schedule, being consistent. All of those help you reach your goals. You break those down by quarter also. So I'm glad that you said that. And that statement about trying. Yeah, a lot of people are trying, right? So a lot of people are trying.
Right.
But trying is a starting point. So you gotta start trying, and that execution is what separates the triers from the doers. So I definitely like that you said that. So
that's a fact.
Yeah. So what's been going on in the market? What have you been seeing in the market?
A lot of uncertainty. Mm-hmm. We have this war talk, PPI numbers, CPI numbers. Amazon is doing splits. Cartwheels.
Yeah, everything. A lot of gymnastics.
The Feds are raising rates. So, a lot of inflation is going on with gas prices, and, the food is going up. Everything is literally going up, and it's affecting the market, right? And what happens is when inflation goes up, people have less spending power because you got to pay more for everything. So how are you going to save? You understand? So when that happens, you got people in the market that's probably scared to invest. Things start dropping, right? Bodies start dropping, stocks start dropping. People get scared. There's blood in the streets. And this is what happens. But it also gives people opportunity to buy. This is a good opportunity to buy, So this is what I'm seeing in the market. How about you?
Yeah, same. So, it was a lot of uncertainty, right? With not only the war talks, but the war escalation between Ukraine as well as Russia, right? And that started because, with the whole NATO thing, Ukraine wanted to become part of NATO, but Russia was like, nah, we want to try to recreate that whole Soviet structure.
Right, back in the day.
Right, that back in the day Soviet structure. So it's like, okay, cool, we're going to take over Ukraine. Y'all coming with us, whether you want to or not, type thing. And that started the war. It's been an ongoing thing since 2014, but now it really escalated and reached that tipping point a few weeks ago. Now, why is that causing a lot of fear and uncertainty and a lot of volatility in the market? Is because Russia is one of the leading exporters of oil in the world. So what that is doing is driving up oil prices across the entire globe. Right? So when you have that
supply
shortage essentially, because they're at war and they're one of the leading exporters, and then you have the uncertainty of what the Feds are going to raise the inflation rate to in the market. The PPI, CPI, which is the consumer price index and the producer price index, and those are measured by how much of the increase of consumer goods versus producer goods over a year and a month-over-month period. When you have all of those things going on, that's a lot of fear and uncertainty. And when there's fear and uncertainty, people are pulling their money out of the stock market. They're putting it in different things like precious commodities, right?
Gold, we've seen gold going up, oil going up.
Yep.
Right.
Those kind of things. So, those are causing, along with seasonality, right? Seasonality is typically when every stock or every index has a high season and a low season, right? A high period and a low period, high months and low months. So, the seasonality, the fear and uncertainty, the war and everything caused the market to drop. But more recently, we start to see it starting to pick back up some, right? And that volatility is
just getting a little pep in its step.
Right. It's opportunities to make money up and down.
Right.
Whether you're a long-term investor, you buy on a dip, or if you're a trader, you can make money and take advantage of those up and down periods.
That's a fact.
Right.
So we seen the CPI numbers, right? You definitely tapped in on the CPI numbers just now, and the PPI numbers, and it's the CPI basically gauges inflation and deflation. Right now, it's at the highest it's been in 40 years, in over 40 years. Right? So think about that. Things are getting higher. We see the gas prices getting higher, chicken is getting higher, milk, just food, the basic commodities, right? And this is what the CPI basically gauges, right? It says, okay, what is everybody using and how much are they paying for them right now? They put all those goods and things like that in a basket, and they say, this is what's happening year over year. It's either inflating or it's deflating. Right now it's at like not record highs, but like I said, the highest has been in over 40 years. And that's telling you something. Everything is going higher. We have these supply chains that was causing an issue. Now we have the war. We had coronavirus that was causing an issue, and it just caused inflation. It caused inflation, and now what is the Feds doing to combat that? They're trying to raise the rates. So those rates that we were getting for homes, those dirt cheap rates that we were getting, we're not getting that anymore, right? They are raising those rates. You're not getting 0% anymore. You're gonna get 5%, 2%, 3% on your home. That makes a huge difference. That means you're gonna pay more per month on your mortgage. So for those people that got in during that time when they had the rates low, you got in at dirt cheap. That you basically you won a prize. Literally
You
came up.
Yeah.
And that was with everything. The auto, everything was low. Loans, to get a loan was low. But now, as the Fed raises the rates, the banks are gonna raise their rates. Everybody's raising their rates, and who's got to pay for it? The consumer. That's you and I.
Right. Now you touched on the PPI and the CPI, as well as supply chain issues, right?
Yeah.
For those who don't know what a supply chain is, it's just general logistics. So if we're ordering things from overseas, right, and goods and services are coming from overseas, due to the pandemic, a lot of workers, they stopped working. A lot of people were out of jobs. We had a lot of things backed up in these shipping ports. So how can things get to their destination? So we have tons and tons of things in these shipping ports backed up. And what is that doing? That's another thing that's causing rates and things, not rates, the prices of things to increase due to those supply chains and everything being backed up. It's more limited. So we have supply and demand. So could you touch on, a little bit more how that's, affecting consumers as well as, the overall economy?
Yeah, so you just said supply and demand. Where there is supply and if there's demand there, right? If it meets that demand, we have that equilibrium. But if you have supply and there's no demand there, the price will go down. So think about it like this. Let's say we have gas prices right now. They're record high. And everybody says, you know what? We're going to go out and buy a Tesla car. Everybody buys a Tesla car and now they're charging at their homes. What's going to happen to the gas prices? It's going to go down because that demand is not met anymore. But if we have a shortage in supply, so think about, let's say there's not enough Teslas. There's a shortage of supply and everybody wants a Tesla right now because, hey, we're trying to get away from gas. And then Tesla's gonna have to raise their prices to meet that demand. You get what I'm saying? So that's basically what's happening. It's a supply and demand. If everybody's out there buying milk, everybody's out there buying, I don't know, Jordans or sneakers, think like that. If everybody's out there buying something, let me backtrack, right? I just said Jordans. Everybody loves Jordan 1s. And if a hot colorway comes out and it's limited, everybody's running for that sneaker. They want it at retail price. They want to pay $150. And if they don't get it at $150, what's going to happen? They're going to put it on GoDex or they're going to put it on StockX, whatever it's called. And what's going to happen? Somebody's going to sell it to you for 5 times that price. That's supply and demand. You want it that bad? I'm going to sell it to you for a premium. And that's what happens. People get beat in the head every single day because of this. Right? Supply and demand.
Supply and demand makes the world go round.
Literally.
The world go round. But it is short supply, limited supply, and the demand increases, then the price is gonna go up. Right? And like you said, vice versa. When there's a lot of supply and limited demand, the price is gonna go down to meet that, demand. So it definitely makes the world go round.
Mm-hmm.
With the changes also in the economy and in the market, we got a lot of big news, right? So 2 of our biggest companies, or some of our favorite companies, they're actually doing a 20-for-1 stock split. So we have both Google, crazy, right? Both Google and Amazon are both doing a 20-for-1 stock split. Let's talk about it.
For sure. So it's, all right, first of all, what is a stock split, right? I don't want to talk about it and people that's listening don't know what a stock split is. So a stock split is when a company, right, starts to split their stock into basically different portions. Let's say you have a pie. You have one pie, now we're going to split it into 20 pieces. And now everybody has more, I'm able to share it, right? So what's happening is Amazon is doing a 20-for-1 stock split. So that means if you had 1 share of Amazon, now you have 20 shares. And they split the price down into sections. You get it? So let's say if Amazon is trading at $2,000 and they split it into 10 sections, how much would that be? $200, right? So now the stock is going to be $200 as opposed to $200. What does that mean for the retail investor like you and I? Now, well, we're able to buy more stock of Amazon cheaper, provides liquidity in market in the stock, and for everybody else it's more affordable. So this is what's happening. Amazon, Google, this is what's going, and it's gonna drive growth into this company and drive money into this company because it's now more affordable. It's more hot to people, right? I'd rather pay $200 for Amazon as opposed to paying $2,000 for it. It's more expensive, and it's probably less upside to Amazon at the $2,000 price, but at $200 now, we know it could probably reach $2,000 again. And Amazon, this is not the first time that they split. This is gonna be their 5th time. So they split 4 times before, right? So they split in 1997. That was their first time. and then they split in 1998, and then they split twice in 1999. So those were good years. That's like back to back to back. And then in 1999, 2 times is like, wow. Imagine just investing in Amazon at that time, you know, depending on what the price was, and holding it for however many years up until now, and then a 20-for-1 stock split, you rich. You know, depending on how many stock you bought. Right.
And at the time of this most recent stock split, Amazon was trading at $27.85. So depending on where it's trading at, you know, once they get approved, because they have to, the board has to officially approve the split, that stock price is going to be divided into 20, and then, as you said, each investor is going to be issued 20 shares at that lower price. Now, the cheat code that Amazon is doing is they have a $10 billion buyback. Now, when a company does a buyback, what are they doing, right? They're buying back shares at a much lower rate. So they're going to split, and then they're going to do a buyback at a much lower rate. So they're going to give investors the opportunities to cash in. And then, why is it a cheat code? Because once that stock price increases, so let's say that stock price doubles in a couple years, now they decide to reissue those shares, and that's going to provide more liquidity for that company. So you buy low and you sell high. That is the name of the game. So that's dope that Amazon is doing a share buyback. You know what I'm saying?
It is. It's for a long time, it's been very expensive for a lot of investors.
Right.
I would ask people, yo, you buying Amazon? They're like, it's too much money. I'd rather buy something else. But now that it's going to be lower and cheaper, more affordable, people are definitely going to be buying Amazon up. Like, you know, that's going to be hotcakes right there. We need all that.
Right. And they'll be eligible for the Dow also. So they can potentially be included in the Dow, depending on you know, their price and a few other things. So that would open them up for more funds to have to purchase Amazon. So we could see a lot of moving in Amazon after this stock split. And you know, more recently, Tesla and Apple, they had their stock splits, and Tesla's already up. Tesla's probably already up close to 200% or more since their most recent stock split, and Apple's up close to 60 or 70% since their recent stock split. So, man, a lot of people, as you said, been waiting for Google and Amazon to split, and with these lower prices, under $200, essentially, a lot of people are going to be able to buy those shares and start building that wealth. So
these are hot companies too. Apple, Tesla, Amazon. These are things that in the next 5 years it's still going to be here. Apple's been here for who knows how long, right? It's been here for over 20 years. Everybody's been using Mac computers and iPhones, AirPods, and it just they keep on innovating. Now they want to get into cars, so it's like Apple's not going anywhere. So why not invest in it, right? Tesla, they're doing solar panels, they're doing Starlink, they are, you know, their cars. It's just innovative. You don't have to buy gas anymore. So this is what's happening. People are running towards that. Amazon, I get an Amazon package every day. Enough said. Enough said. You understand? So these companies, when they do these splits, you definitely want to get into it. Another thing, a lot of people always ask in the community, and just, you know, should I buy Amazon now or should I wait till the split? What would you recommend?
Not financial advice, of course, but as you said earlier, if Amazon right now, the price at the time they announced the split was $27.85, but now it's over $3,100 a share right now. So you can buy something at $3,100 a share, or you can wait and see if the price is going to be under $200 a share. You can buy that many more shares. So for me, I think it's preference. I can't tell you to go buy it now knowing the price is going to split, or wait. It just depends on what you want to do. So what would you recommend?
I would actually recommend to wait.
Okay.
I've seen stocks split and drop, and they're cheaper than what they split at. So you might as well just wait and buy up as much as you can at that point, right? And instead of buying it now, there's no telling where it can go. Stocks can go to zero. So why buy it at 3,000, and if it goes sub 200 or sub 150, you're gonna be like, yo, what's going on, right? So you might as well just wait and see what happens and scale in. So what I mean by scale in, just, you put your initial investment down, or, a little, not your initial investment, maybe 50% of what you wanted to buy of Amazon, and if it drops, you start to scale in, you buy some more. If it drops more, you buy some more. You understand? So I would recommend scaling in instead of just, dumping the whole truckload on Amazon at one time.
Right.
So that would be my take.
And that's a good point, and that kind of ties in also with seasonality and things like that also, right? Since the market does have a lot of uncertainty, you want to factor in seasonality into some of your decisions. Now, with seasonality we spoke about, but it's the high points and the low points of the year for companies, right? So I'll give you an example. The energy sector, okay? The energy sector has a high seasonality in the summer. Why? Because it's hot. The summer months are hotter. A lot more people are home, so they're using a lot more air conditioning, right? So that means your air conditioning bill is going to be higher, which raises the value of, revenue and things for the company. So those companies tend to go up in the summertime. So if you want to purchase some Amazon shares or some Google shares, check out their seasonality months, right? The times where they're going to drop. There's certain times during the year you want to factor that into your decisions. You don't want to buy something when it's super high. If something is approaching an all-time high, it's more than likely going to have a pullback. So again, you want to wait until the seasonality is, probably at its lowest, and then you can make a decision to buy your shares.
And you could check out where check out the seasonality on stockcharts.com.
Stockcharts.com,
bar chart.
Yeah, Yahoo, Google. There's several places where you can check seasonality of stocks.
Right.
Yeah.
So
when it comes to long-term investing versus shorter-term trading and investing, all right? Do you have a preference of what you're doing?
Whichever one's gonna make me money.
Money printer. Money printer.
I like long-term investing though. Buy, hold, even with options, right? If you can just buy contracts that expire in six months to 2 years, it's less work, and you could print more. Yeah, it's dummy proof, depending on if the market is in your favor. If it's like a trader's market where it's going up and down, then you really have to adapt to what the market is giving you. You understand? So it really just depends on the type of market that it is. What about you?
I like a mixture of both, right? So like you said, I like the long-term mailbox money options trades where you can just sit and park your money and let it cook. But I also like the long-term investor for dividends, right? You love getting that thank you for parking your money with us, every month or every quarter or whatever. I love that. And I do like some companies for appreciation, right? Like Apple, Microsoft, those kind of companies. But
right.
I do those dividends. You just can't beat those dividends. And for any one of you who don't know what a dividend is a payout that the company gives you for investing. It's essentially a thank you for investing in our company. And when they're performing well, right, their investors receive some cash back. So it's like saying, hey, if you give me $100, depending on what my dividend yield is, which is the percentage of money that you earn per year, I'm gonna give you back, X amount of dollars. So if you give me $100 and I have a 10% dividend yield, I'm gonna give you back $10 per year, and then that's divided how often they pay their dividend out. Could be yearly, it could be quarterly, it could be monthly. Okay, so yes, companies are also paying you to invest in it.
Right. It's a lovely feeling to park your money and get paid for it. You are now you're now part owner of that company for as long as you hold it. So I think that's something that a lot of people just don't understand, but it's a great feeling. You park your money in a company, they pay you, and that's money that's made in your sleep.
Right.
And it's money that if it was sitting in the bank, it probably wouldn't even make that much money. And a lot of people like having their money in the bank, but they got to get out that mindset.
Talk about it.
I feel like it's It's a weak mindset, honestly. You know, I need to have money in the bank. I need to have money in my savings. Why don't you have money in the stock market? Why are you not getting paid investments?
That fear and uncertainty, right?
Yeah.
So that fear and uncertainty applies to a lot of consumers because a lot of us are taught to save. We look at investing as a scam. I know a cousin's friend's brother who lost everything in the stock market, right? So we use that as that one person that we don't even really know of. We use that as a scapegoat for not wanting to completely educate ourselves, to go on YouTube University, to hop on Google, and to learn as much as possible about investing. And it's about strategic risk taking and strategic investing. You're not going to invest in anything, or you shouldn't invest in anything that you don't know of or you haven't researched. You get in a stock tip from, you know, your cousin's friend's brother who owns a restaurant in the basement,
who claims they're a guru,
right? Who's never bought or sold anything. That's not the way. What you want to do is invest in companies that you consume, that you know about, who have strong track records. The Amazons, the Googles, you know, the Teslas, the Apples, the companies that are gonna be around forever. That's gonna help you print money. Don't go chasing these waterfalls, right? Right. These fly-by-night stocks, these
TLC.
stocks, right? Shout out to TLC, but I'm gonna go chasing every single thing. These penny stocks and these things that have no backing, no background. Not saying they can't make you rich, but how often are penny stocks making people rich and wealthy? So you want to do your research, do your due diligence on these companies that have strong backgrounds, and then you want to invest and watch your wealth build. So I think if more people had that mindset, like I'm going to learn and educate myself as much as possible before I invest my money, instead of taking a stock tip from somebody random who's not doing it. I think a lot more people would have less fear of investing, you know, whether it be long term or short term.
Investing shouldn't be scary though. You go to your 9 to 5 every day, that's scary. If you ask,
But
if you ask me,
for some people that's comfortable. The 9 to 5 is comfortable because you know you have a check coming bi-weekly or weekly, depending on whenever you get paid. But it's comfortable. But
get comfortable with investing, y'all. Get comfortable with investing. Start teaching your kids how to invest now. You hear what I'm saying? If you have a kid, you should be teaching them how to invest young. This shouldn't be something that's scary because people have been doing it for years and they're wealthy. How do they get wealthy? They're not teaching you this in schools. Why? They want to keep you. They want to keep you comfortable. They want to keep you at that 9 to 5. Who's gonna run my business if it's not you? But if you got your money going out there working for you, what's gonna happen? You're gonna buy your time back. You're gonna have more time for your family. You're gonna have more time to do what you love to do, to truly run your life how you wanna run it. You understand? So I think a lot of people just need to stop being so scared of investing. I talk to so many people, they're like, I'm just scared of this thing. I look at that chart and it's just like Chinese. Okay, when you were a baby, you looked at the alphabet and it looked like Chinese too.
right.
You understand? So you gotta get comfortable. You gotta get uncomfortable. You gotta be comfortable with being uncomfortable.
Being uncomfortable makes growth.
Yeah.
Being uncomfortable, that allows for growth. And
You gotta get out there. You know what I'm saying? And educate yourself. There's no way that you're gonna grow doing the same things that you were doing 5 years ago, 10 years ago. There's no way.
You didn't start off learning how to drive a car. You didn't start off going to school and passing tests, learning. Everything was a learning process, right? You didn't just start off where you are now. So I think that also a lot of people are scared to be seen starting at the bottom. We got to get out of that mindset. Start from the bottom, build up your base, build up your foundation, and then take that leap, right? You ain't gonna grow unless you learn.
You want to be a butterfly? You gotta get out the cocoon. You gotta get out the cocoon.
I like that.
But look, butterflies are beautiful. They look nice. They be flourishing, flying, heavenly, beautifully, all over the earth. But they were once caterpillar. Got in their cocoon. Right? There's transitions. There's stages to life. You don't just wake up and be a billionaire. Right? You have to have that mindset. And then you have to go out there and really get it and grind for it. But it's just a beautiful thing though, and I feel like a lot of people try to run away from it and try to take the back streets and how am I gonna do this and get there faster? But there's no beauty in that.
So we had this conversation the other day.
We definitely did.
The beauty is in the journey, and a lot of people don't realize that. So it's like, all right, you have a goal to make 7 figures, 8 figures, and you get there. It's like, what? Okay, what now? What do you do now? But those steps and everything that you took along that journey to get there, that's the most beautiful part. Like, okay, I learned this. I learned how to do this better. All right, I learned this lesson. Okay, I can't do this. I can't do that. So the journey is beautiful. The journey is fun, and then you can pass that knowledge on to other people, right? To make other people's lives easier. But people want to skip over the journey and just get to the destination. You can't teleport.
Can't do that.
You can't teleport. Like, we don't have a teleportation pad where you would just, all right, I'm here right now, and then okay, now I'm at point Z. Nah, because what happens if you skip over the journey and you get to that blessing or what you're trying to reach? You're not gonna be able to fumble. You're not gonna be able to keep it. You're gonna fumble it because you don't know what it takes to get there. So if somebody just hands you $10 million, you didn't go through all of those points. You can be like, all right, cool. Well, all I know is what I was doing before. You're gonna blow it.
You're gonna blow it.
Because why? You never embraced that journey. You never learned those lessons. You skipped those steps, and now you're gonna fumble that bag, that truckload, because you wanted to skip it. So
you need those trials and those tribulations.
Man,
you really need it. That's what's gonna build you up. You understand? You can't, as a baby, you can't come out the womb and start running. You're gonna crawl a couple of times. You're gonna flip. You have to put your neck up. You're gonna flip. You're gonna crawl. You're gonna walk. Then you're gonna run. You know, and this is, it's a process. Everything is a process, and I feel like as adults, we tend to forget that. Or social media starts to cloud our judgment, and we start to see what's going on. Like, oh, this person got that, I need that. And it's like, okay, you need that, but you don't know how that person got it.
Right.
You don't know what that person's doing. They probably don't even really got it like that.
For real.
And you think that, you know, I gotta get it because they got it. Do what's right for you. Honestly. Do what's right for you. I think a lot of people don't understand that. They just gotta do what's right for them in the moment. Don't be looking at what everybody else is doing and try to look cute for everybody else. Look cute for you. Do what's good for you and your family. You understand? So that's just another thing. Like,
for sure, comparison is a thief of joy, because
really
now you're not appreciating your journey, what you have, where you came from. Like, you think about where you are today. You were praying last year and hoping to be where you at today, and then now you at where you're at today, and you look at somebody else like, damn, now you feeling down and you feeling crazy. It's like, yo, you were just praying to be here, literally, months ago, and now it's like you're not embracing where you're at. You're not being thankful. You're not showing gratitude for where you're at. You know what I'm saying? So slow growth is better than no growth. You got to run at your own pace. Right? Slow growth is always better than no growth.
Slow money better than no money.
Slow money is better than no money.
That's
you know what I'm saying?
fact.
It's like, yo, you can build up a head of steam. Learning how to compound not only your hustle and your muscle, but compound your money. All of that stuff ties in together.
You gotta compound your mind too. A lot of people don't compound their mind. Right? How much are you reading? How much are you learning? That's gonna really determine how far you go and how fast you grow. A lot of people don't wanna do the work. Show me how to get to this money right now. That's what everybody wants to know.
And then when you show them what they gotta do, they're like,
whoa.
I gotta do all of this?
Like, slow down, bucko. I ain't doing that.
All right, maybe I could take some of this out the recipe. Maybe I could take this shortcut.
Right.
Before you know it, you stay locked in 6 months, 12 months. And then you get a message like, damn, man, can you show me that stuff again? Or I wish I would have stayed down. 12 months flies by.
It really does.
J. Cole said it the best. Keep grinding, boy. Your life could change in 1 year. Like, before you know it, you blink and you stay down, you stay locked in. That 1 year can change your whole life. You grinding for 6 to 9 months can really put you ahead 5 to 10 years.
That's a fact.
Now you got a whole head of steam. So stay locked in, keep grinding, enjoy the journey.
Keep learning.
Keep expanding that mind muscle. That's the greatest muscle. To have that brain, keep expanding that. You know, keep asking questions and enjoy the journey. Don't let what you see on social media, what you see other people posting and other people doing, don't let that get you down on yourself, because essentially social media is your resume, your online resume. It's a highlight reel. Social media is a highlight reel. Everybody's going to show you what they want you to see, what they want to show you. You're not going to see the real, for the most part. A lot of people are not super transparent. You shouldn't be. So it's like a resume. You're not going to apply for a job like, well, I messed up this project here, and
I got fired here.
I'm coming to work late. 75% of the time. Nah, you're gonna highlight what's gonna make you look the best. So, I say that again to say, do not let social media and these external things that you see get you down on your accomplishments. Right? Embrace your journey. Your journey is your journey. Embrace it. Fall in love with the process. Keep doing what's best for you. Mind, body, spirit, everything all in one.
My billionaire brother, man.
Billionaire brother. So
that was amazing.
Man.
Thank you for the words, bro.
My brother. Thank y'all for tapping in and tuning in with us. I'm your co-host, Dame, here with my billionaire brother, Tola. You can follow us on Instagram. My Instagram is DameBondTM. That is DameBondTM. No underscores, no special characters, nothing. Please don't follow any fake pages. My billionaire brother, Tola.
Yes, you can follow me on Instagram at Live Life with Tola. That's LIVELIFEWITHTOLA. No underscores, no asterisks, nothing else. A lot of scammers out there, so please beware. And you can follow us on our business page, The Money Printers TMP. Right, that's on Instagram as well. And be sure to like, comment, subscribe, and follow us on YouTube. Peace.
Peace.